In this short video, I want to introduce you to trading platforms, and in particular, the trading platform that I use, which is free. And let's just simplify all trading platforms, really straightforward. ABC. A in all platforms will be a place where you get the particular security you're trading. So it might be foreign exchange, it might be gold, it might be oil, it might be the FTSE 100 or the Dow, and it tells you the price and you can click on it. When you click on it, you get to screen B, which shows you the price movement, and you could set these so that they are 1 minute or 5 minute bars. In other words, each one of these verticals could be a minute or 5 minutes or a day. Why would you want to change the time frames? Well, again, it depends on whether you can sit in front of your screen, in which case you might want to put 5 minute bars on and get buy and sell signals accordingly from your trading strategies very quickly, because it's just each bar is 5 minutes. Or you may want to look at daily charts because you're not in front of your screen that often, so you don't want the signals so frequently, and therefore each one of these bars would represent one whole day's worth of trading, and therefore the buy and sell signals would come less frequently, because if a bar is a whole day's trading, it might take 4 or 5 or even 6 or 7 bars before there's a buy signal, whereas on a 5 minute, if it took 4 or 5 bars, that's in 20 minutes, of course, you'd get it. Whereas on a daily chart, it would be a week, because it would be 4 or 5 days before you got a signal. And then you've got C, which is where it allows you to check the time frames that I just mentioned, but also just make amendments to the color of the background, the type of bars you see, placing orders through the trading platform, and so on. And as I say, with my platform, the platform that I prefer, which you can find out through the website, through this website, I find this. It's all free and it's easy to do, and you're plugged into the brokerage, a well-known international brokerage, and so it without commissions, and these are all critical factors. So let's just go into this in a bit more detail about using trading platforms, and the one I said I use is something called MT4, and why it's as easy as ABC. As I mentioned earlier, you click on A to see the security you're looking to trade in. It might be sterling dollar, it could be gold, it could be the Dow. Then you look at the price on screen B. You on part C pick a time frame, so it could be 1 hour charts here. That then appears on the screen, and then you place an order. What does an order screen look like? It looks like this. When you double click on this, you'll see an order screen, and you choose whether you want to buy or you want to sell, and you can see the sell price here, and you can see the buy price, and you can see that there's very little difference between them, and that's good because there's no transaction cost then, because there's no commissions either, and so you're paying next to nothing in terms of cost, and that's all very, very good for a trader, because it means that they're able to trade with, as I say, next to no cost at all. And as I say, it's as easy as ABC using all these trading platforms, as we can see. And placing orders means just clicking on a buy or a sell. It could not get simpler. Of course, it comes down to, when do I know when to buy, when do I know when to sell? Well, that's in the other sections on trading strategies, and I've given an overview there. But let's just go back to an actual example. Let's just remind ourselves of foreign exchange again, and how it works. The way it works with foreign exchange, it's leveraged, which means that it trades in lots of 100,000 of the currencies, or $100,000. That doesn't mean you've got to have $100,000, because $1,000 will allow you to control $100,000. The broker will take care of the rest of it. So even with $1,000, you control $100,000, which is one lot. So $100,000 times 0.001. Why 0.0001? Well, because that's how currencies are quoted, and you can see a quote there, 1.3100. So each pip must be, or each point there must be $10. So if you exited at 1.6200 and entered at 1.61, then you must have done, as you can see, 100 pips. See the maths, entry, takeaway, exit. And 100 pips, given that each pip is worth $10, how do we know it's worth $10? Because we had one lot, which is 100,000 times 0.0001, means you made $1,000 profit. Pretty simple. So that's what we're trying to do. We're trying to make those kinds of profits. That's the maths of working it out. But to be honest, it gets very easy once you do a couple of trades. You quickly work out how much you've made. And of course, the computer software keeps it all updated for you anyway. So that being the case, what we're trying to do when we click buy and sell is capture those pips. The issue occurs, how do I know when to buy? How do I know when to sell? Now that I know the kind of profits and how I calculate my profits, when I make an order, how do I know when to buy and when to sell? Well, as I mentioned, the way you know that is using some of the trading strategies I discuss in other parts of the videos. And that's all there is to trading. You've got a platform. You've got to make sure that it doesn't cost too much or anything at all. That's free. There's no commissions like my platform, and therefore you can make these profits using the strategies. In the case of foreign exchange, by the way, when are these profits made? Well, let's look at the average pip movement as the major currency pairs during each trading session. So when Tokyo is open and London is open and New York's open, you can see when the major moves happen. They actually happen during London hours. That's when you get the most pip movements. And whenever there's movement, there's the opportunity of profit, of course. What I will talk about next is how to open an account. But for the moment, what I wanted to get across in this video was how we place an order. It's simple. You click a buy and sell. Understanding how profits are generating whenever these orders, well, it's obviously a price. It's the difference between the entry and the exit price, or the buy and the sell price. How much profit is simply the difference between the price and how much each pound is worth based upon how much we staked in the trade. And using the platform, we could see on screen everything that we need. The security, how to buy and sell, the order sheet. It's really very simple once you get to grips with it. So the next thing we really want to know is, okay, Alpesh, which one do you use? Which is so cost effective, which is so cheap, and how to open an account with that so we can get going and get on with our trading.